let's talk about the VIX. Let's talk about
Sure.
volatility. Let's look at the channels because the trend had been these kind of lower lows, lower highs on the VIX, and now what we're
Mhm.
seeing is just kind of hanging out, not doing anything, right? So, what are you seeing here? Because you were telling me that volatility is dead because of the sheer volume of all these calls and puts being sold each day.
Well, I think the risk scenarios for VIX and volatility have changed, is what I
Mm-hmm.
think is going on. Prior to these daily options, you got to look back at the way VIX would move, right? You had kind of two main ways VIX would move. All right, it could spike or it could swell. All right. Now we got a lot of spikes leading into over the last 10 years where we're hanging around 14, 15, 17. Something scary happens. VIX runs to 25 or 28, and then within 3 days we're right back to 16 or 17. We saw a little bit of that in 2019 and saw some of those in 2020, but then the other kind is a VIX swell. And a swell is when you see this, the VIX kind of slowly cascade, and then you get kind of an explosion, right? Think about it as a swell is the earthquake that starts that wave, and it ends in a tsunami. A spike is when your toddler standing on the ocean and some big wave knocks them down, right? That's what a spike is. And these daily options are a better way to trade spikes than anything you would do in VIX and anything you would do in the monthly options. And so for 2020, for 2023, one of the big changes I'm seeing, and I'm going to, they said I could share this. So I'm going to share this, this report that I got from Tesoro Advisors. Jim Carroll, super smart dude. Tesoro Advisors, they are some pretty darn good volatility traders. So I want to show everyone this report. I can get it open. Here we go. Because there's a really important stat that I wanted to share. All right, so do I have screen share, Ryan?
I sent you a link.
Yep. Give me 1 second here, folks. So Tesoro Advisors provided me with this, and again, good dudes. Yeah. All right. So Garrett, this is, I think, I sent you a whole deck on the volatility review. I think this is the most important chart on the whole deck. So the red on the upper bands is how much, how SPX versus SPX up, VIX down, and SPX down, VIX up. All right. How VIX has responded with the SPX down and up. And there's a couple of trends here that we see. All right. This is 2022. What I want you to notice is in every prior year, look how VIX stretches further and faster and higher when SPX is down relative to how it falls when SPX is up. And what you'll notice is that in every year, every single year since they listed VIX futures, VIX responds to a down move in S&P much harder than it responds to an up move in the S&P. So VIX loses less on rallies than it picks up on sell-offs. And then we have 2022. And for the first time since they listed VIX futures, volatility responded stronger on down moves than it did on up moves. Volatility responded stronger on SPX up moves than it did on down moves. And that is astounding. And that is trend breaking. That is crazy. Why? I think it is directly related to the introduction of S&P daily options trading, and the fact that, maybe you write it off the fact that I do think we're in a cyclical, receding volatility environment. But what this means for us is that we can trade things like VIX, UVIX, UVXY, VXX, and you can kind of be, especially in this declining volatility environment, the risk of being short vol has been absolutely bludgeoned. And I've never seen anything like this before. I don't think anybody has. And so this is, I think, reflective of how the just giant, and I don't think the CBO knew what they were doing when they did this, right? They definitely did. But how fundamentally they have changed markets with these daily products. Markets are not going to be the same ever again, because I can buy a levered option, a levered product that represents 100 times the value of the S&P 500.
Right.
And it will dissipate in hours. It just changes everything.
Yeah, and again, what we've been seeing out of this market, and this has really accelerated since September, is where I was talking to some people yesterday, and I said, all right, with these algos, you hit this level and you bid. Will it program to turn around and sell a call at the first standard deviation to the top? He's like, absolutely. Like multiple times over. They have kids, 25-year-old computer engineers coming in, basically explaining exactly what my thesis was. They're going to bid here. They're going to sell a call here. That same day expiration. If they can't find the trend, they exit the trade. That's leading to the partial, kind of those bleed off sell-offs like we saw last Wednesday. But that explosion in that daily trading. Again, they don't need it to go from here to here. They just need it to go back to VWAP, and they're going to close the position and they're going to take a gain. And you do that how many times a day, how many contracts, and now you've got a money machine. So it's a real weird world, Mark, and the only thing that we can do is really react to it. But I mean, this is something that Stanley Druckenmiller warned about 4 years ago, and I didn't see it in application until recently to really understand that this is something that a lot people smarter than me have been doing for 20 years, but now the technology is there and the regulation is there. And the exchanges are participating in this to facilitate.
They're loving it.
Yeah, why wouldn't they? Yeah.
Garrett, let's think about this volume, though. All right, on Wednesday. On Wednesday options that expired on Wednesday, 95,000 and we were trading S&P closed 40.16. That was that crazy day. 95,000 of the 4,000 calls, 75,000 of the 40.20s, 65,000 of the 40.15 calls. 45,000 of the 39.50s, 31,000 of the 39.45s, 33,000 of the 39.60s. There's 100,000 and 300,000. In options that expired in less than 24 hours, we traded 400,000 contracts. So that's 400,000 times 100 times the strike price, which is, let's just say 4,000. Think about the money that is trading in S&P daily options now. They've become the dog, and the futures maybe are becoming the tail, which I never, ever thought would happen.
Now, explain what that means. That's important. Explain what that means, because entire market philosophy is turned over. Go ahead.
Yes.
Explain it.
Yeah. For years. One of I bag on Vaz because she sits there and looks at SPY at the end of the day, and I'm like, SPY is driven by S&P futures. Like, watch the futures. And options were always driven by S&P 500 futures. All right. We're using S&P 500 futures to hedge. We're for every option trade, there was, in terms of notional value, you'd see a lot more value in the S&P future. That has changed. Now it's the daily options are now, somebody comes in and buys 10,000 calls, and then that drives the futures, right? Because there's so much delta being executed at once. And it has never been that way in the history of trading markets that I've watched. And so, if Cboe thought they had a home run with VIX, which they did, and they maybe butchered their VIX product a little bit, they're going to have to think about ways to make the VIX work a little better now that we've seen these changes, or come up with a one. We need to take another harder look at the 1 week index, frankly.
Yeah, I mean, again, this is a very different market, everyone. And again, if you're looking at the chart that I have, this is the S&P 500. This is the SPY ETF. Again, Mark just said, the SPY is being driven by the futures, but you can see in real time there are distinct points where this thing will try to target and then sell off. So don't be shocked to see it come up to 404 and then reverse and come down here to maybe the second deviation and try to move higher today. We haven't seen that type of gap up to start the day. Typically this week we've been watching a sell-off into the 10 o'clock hour, but the market seems to be reacting positively to the PCE.